Hello again and welcome to our channel Investment Ventures. As a disclaimer, this is an educational video and I have a very interesting topic for you today, which is price and volume analysis. If you have been following us and you like our videos, do follow us on Telegram, Facebook or YouTube channel. The link is in the bio. So let's start. What is price volume analysis? Price volume analysis is the study of the daily volumes in a stock compared to its average trading volume. And it helps to identify whether there's accumulation or distribution happening in that stock, so you can time your purchases and your sales in that stock. Of course, there are certain criteria for identifying which types of stocks to use and which ones to avoid. So we'll see all that in the subsequent slides. First, what are the advantages of using price volume analysis? Number one, it is very factual. It is data based. So basically, data is knowledge and it gives you hidden insights, right? So if you use this, you can really tailor it to your advantage in timing your sales and purchases. It catches the trend before the stock actually makes that move. So you will see a pattern in every time the stock is declining or moving up. You will see a pattern in the volumes. Now, this price volume analysis helps to determine that pattern that's happening in that stock. It also kinds of tells you a story whether there's accumulation going on in the stock or there's distribution. So like you always hear, right, the operators are already front running the move. So you can get an insight on what's really happening. Now, unless the marketplace spoils sport, so let's say if there's a war that happens or there's something else that goes wrong, where you cannot control and things go beyond anticipation. In that case, no indicators, nothing works. But in a normal market, in a normal trend, it really is very beneficial to use this analysis. So what are the criteria for using price volume analysis? What stocks, how do you select a stock? And what have we been doing in the past? So number one is you catch hold of a trending stock. So the first criteria, even before trending stock, should be the stock has to be fundamentally strong. So any company that's doing well and has been a stable company, you can use this analysis on that stock, and it's easy to identify the trend because number one, the stock is in a strong uptrend or downtrend. We prefer the uptrend because it's easy to identify and easy to play those moves. And secondly, of course, you cannot short sell easily unless you're short selling a futures contract or you're selling existing stock that you hold and buying it back. So for the sole reason that we prefer to buy and sell rather than sell and buy. So you catch hold of a strong company, you catch hold of that trend, you identify that main long-term trend. We prefer stocks with high promoter stake because high promoter stakes means, let's say if the promoter holds 70% or 75%, that means that 75% of the stock is not going to come into the market easily unless the promoter has pledged his stock or sold his stock or is planning to sell his stock. In that case, well, if he's pledged the stock and all, we wouldn't touch that company because then there are other factors into play. So we want a company which is low on debt, high in promoter stake, and is in a strong trend. My third criteria is we want a stock which has medium volumes, not too low and not too high. So if you start looking at high volume companies like Reliance or probably Tata Steel, it's difficult to look at those big numbers and identify the trend, at least personally for me. So I prefer stocks which have got medium volume. You can easily track it and you can see the difference in the numbers. The other supporting indicator, technical indicator that I use just to confirm my analysis is Bollinger Bands, and I'll show it to you on the charts also. Okay, before we go down how to get the data and all, let me show you what analysis I have done on Tata Investments, and I'll show this to you based on the 3-month data that I downloaded from the NSE site, and then later on I'll show you how to download this data also from the NSE site. So if you look at this, this is data right from 24th August up to 22nd February. So basically this is 6-month data that I downloaded, not 3 months. Now, when you get raw data from the site, you get these columns. I add 2 more columns. One is an average of the 5 days trading volume, and what is the current volume, which is, you don't need this column, but because you already have this, I just use it for my highlights. Now, observe the trend in here. Okay, now if we start from 24th August, let's say we started this analysis from 24th August, and you have identified that there's volume. First of all, you need to also check on the side, what is the average volume the stock trades? Is it 40,000 a day? Is it 20,000 a day? So you get an approximate idea. Now, let's say this is the volume we started with that day, 40,000. Next day was 100,000. Following day is 57,000. Then it's 30,000. Now I have taken an average of the last 5 days of the stock, which is 54,000. And then side by side, I also plot the cell, which is the current volume for the day. Now, the way I track this is, if I'm looking at the average, my current volume is below my average. And I track it. I continue to track it. So if you see here 34, 52, 37, 29. Now, in this case, my current volume has gone above the average volume. My average volume is dropping, which is, for my analysis, is a good sign. My current volume has also been dropping, but now it's starting to go above the average, which is a get ready indicator for me. Now, if I look at this, the stock was at 839 that day. Now, we can also confirm this on the technical charts, but let's see what happens as you go forward. Now, as you go forward, the current volume significantly drops than the average volumes. But the price is not dropping as much. You see, this is 823, this is 817. This is the closing price for the day. Actually, this is the closing price for the day. This is the value, the average price for the day actually. The weighted volume average price for the day. So if I look at this, the weighted average for that day was 839. In this case, it was 823. So it's not significantly dropped, although the volume has dropped a lot. Now, another thing to remember is trends do not turn around with low volumes. Trends turn around with very high volumes. So if the stock is dropping on low volumes, it is a good sign because it is getting accumulated. Now, see the trend, how it goes. 839, 823, 817, 813. Volumes are significantly lower than average volumes. 1/3 of the volume. Again here, less than 1/3 of the volume. In this case, half the volume or 2/3. Now, there's a drop in price here. There's a drop in the average volume and the current volume has gone up. Okay. Now you have to look for a confirmation in trend because now there's a possibility of a reversal coming up. Now you see the next day. It is 801. Volumes are low. 799. Volumes are slightly higher than the average. Now you see there's a pickup happening and the stock starts to become it starts to trade in a very tight range. If you see the range, 794, 801, 799, 3 days of very tight trading range and the averages are low. The current averages are showing some signs of spiking up and you see the next move that's coming. Stock jumps from 799 to 845. You see the volumes here, 156,000. Next day, 898, 256,000 volume. Now the stock has turned around on high volumes, but also remember that the operator will operate in such a way that he will accumulate the stock, distribute it, accumulate it back, again distribute it. So now you will have look for a distribution trend because these are high volumes now at higher rates. So you see this 256,000 volume, stock is 900. It's already been 15% up, close to 15% up. Now the volumes start to decline. The averages are going up, but the actual volumes start to decline, which means that now the distribution is happening for the next few days. So you will see this distribution happening. Average is 97, current is 86. Average is 107, current is 30,000. Averages are high, currents are getting lower, which means there's distribution happening. When the averages are lower and the current is getting high, that means there's the trend reversal is coming. Okay. Now you see here again. Now volumes start to significantly drop from 100,000 average. It's come to 32,000 at a current level. 55,000 average, current is 29. 44,000 average, current is 16. Now this should start giving you some signal that okay, volumes are dropping. The price has come back down. Now look at this. I have highlighted this in yellow because this is a real low volume day for the stock. The averages have dropped also, which means it's going back into accumulation phase now. So you see this tight range now, 850, 824, 826, 839, 838. The range has become tight. The volumes have dropped. There was a spike in volume earlier, which means it was distributed here. Now it's getting accumulated back. And now you see the current volume starts to spike above the average. So stock is just around there, 844, 17,991 versus 17,854. Small difference. So, but I have just highlighted it because of a rule that I've set. Next day again, tight range, 842, stock volume is low. Third day, tight range, but the current volume is high. Again, this starts to give you a signal here. You see the pattern here. And then you see the high volume spikes. See the same pattern here. And then you see the spike coming. 100,000 volume, your stock price jumps from 851 to 889 that day. High was 905. Next day again, there's a drop. So whatever got accumulated, they are distributing it again a little bit here. So the stock is high still, but then you start seeing it dropping, 891, 870, 866, and the volume goes absolutely low. Now again, I mean, it could be an alert sign that volumes are low, the stock hasn't dropped too much. Now it is getting back into accumulation phase very soon. Basically, it's an uptrending stock. That's why I said we need to catch hold of a trending stock so we can play the ups and downs of it. Now you see the same pattern repeating. Stock drops 859, 861, 852, moves into a tight range 850, 851, 850, 850, 855. Volumes starting to show signs going above the averages or showing signs of being extremely low. And then again going back above the averages. So you see this is a big phase of accumulation happening here. This whole phase is an accumulation phase based on our analysis. And then you'll see the move coming in. So this gave us a lot of confirmation in this moves. We played these moves. It took us a lot of patience to wait through this accumulation, but then it did pay off after that. And then you see the trend changing. Okay, then you see 850 moves up to 862, volume goes up, 876, volume goes up, and then you see the spikes coming. And then you see the big one here, 148,000, 927. Again, same pattern, tight range, and then you see the spikes coming back. 300,000, 1052, 1057. So you saw we played the ups and downs. We caught hold of this stock around the 850 mark, and we got off at the 1050 mark. We didn't play this trend because we saw there was the same pattern recurring, and since the accumulation phase was big, we were expecting the jump to be significantly higher than 10 or 15%, and it ended up with a 25% gain for us. So you'll see this, I mean the trend, it actually hit a high of much more than 1057. I remember that. Okay, yes, here it is. 1100 is what it hit that day. We got off at 1089 somewhere. So if you catch hold of a medium range stock, it is easy to identify these trends. We see the same pattern repeating in Tata investment recently, and we have started to look at it. So it's around the 17th, 18th, 19th of Feb. We are seeing this pattern getting repeated now. So probably it is due for an up move around the 1058, 1063 levels. It's getting into a tight range. It is probably due for an up move either today, tomorrow, or probably in this week or so. Okay. Now let's look at the confirmation pattern in the charts. Oh, there you look at it. Tata Investments has actually indeed jumped up today if you look at it. So let me go back here quickly. So our pattern showed 1058, 1063, 1068. This is on 22nd Feb. Now that I'm doing the video on 23rd, I see the trend has actually made a move. You see the stock has jumped to 1085 already. So it was a confirmation of a move. Yes, the stock is up 29 rupees today already. Okay. What I wanted to show you was you can use the volume oscillator for this. The volume oscillator, I prefer the shorten length at 5 and 10, which means that I'm looking at a 5-day average and a 10-day average. So my slow moving is 10-day average and my fast moving is 5-day average. Now what it does, it looks at the 10-day versus 5 days and gives you when it is declining. So anything below 0, there's a 0 line here. Below 0, I start looking at it that, okay, the trend has gone down. Then I will look at the chart. If it is somewhere close to the middle line of the Bollinger Band or the bottom line of the Bollinger Band, it is an easy call for me that, okay, the volumes are indicating low volumes. The stock is near its support levels and all I need is just a confirmation and it should come very soon. So basically I can start acquiring my stock around these levels. If you see, these spikes do come here. The stock is at 824 here, then you get a spike, it goes to 901. Again, it falls back into the accumulation pattern. You could accumulate it at possibly at 844. Your next levels could have been 830, but they were pretty close. And then you see these big spikes coming in back, 893, 947. If you see a tight range for a long duration of time, means the up move is going to be powerful. It's not going to be a short up move then. So you wait for the big one and then you get out here. And then again you'll see this pattern recurring. You'll see this declining below 0. And then once you can start accumulating around these levels. You can never be 100% perfect that you'll catch it at the bottom. So you can be fair enough by acquiring it over a couple of days to average your purchases out. And let's say even if your purchase average was around 970, the bottom was around 938, 970 is a fair average. You probably got it out at around 1123 or something, which is fair 15-20% move. Now the same pattern is happening here. There's been a lot of accumulation on the downtrend. We will see this powerful up move coming. We should see this powerful up move coming rather. So this is what I wanted to show you today. I mean, you can have, the only thing is you'll have to select a few handful of stocks that you need to track and then focus on them, because you can't jump stock every time and identify these patterns very easily otherwise. But if you select a few number of stocks, let's say you have 5 solid stocks you want to, and I can just name a few. Please use your discretion. Please talk to your financial advisor before you use any of them. Stocks like Marico, stocks like Asian Paint, stocks like Tata Investment, then you have Dabur, you have even a cement stock like ACC. The big names you can trade in this way fairly easily. Just make sure that the stock doesn't have crazy volumes like in millions of shares, because then there are too many people trading it and you cannot identify which operator or which institution is getting in and getting out of that firm. Neither should you catch hold of a stock which is extremely low in volumes, because again, extremely low in volume means that it is tightly controlled by only a handful of operators. So it's best to avoid that. So catch hold of a medium volume stock that is of a good reputed brand, probably like a Tata company, or even known companies, like I said, Dabur is one of them, or even ICICI Prudential. These kind of stocks you catch hold of and then you trade those trends. Lastly, one thing I wanted to show you was on the data and how do you capture this data. So if you go to nseindia.com, you key in the stock code here. So in this case, it was Tata Invest. Then you'll come to this, you'll see various tabs in there. You click on the historical tab and then click on the time duration you want to download this data for, 6 months, 3 months, whatever, so that you can do your calculations, you can do your averages. 3 months is good enough. I just did 6 months to show you all the past history. So you download that data and then you use your tracking and coloring just to make sure that it catches your eye when to get ready and when to start investing in that stock. Okay, that's all I had for you all today. I'm just repeating this. If you like our videos, follow us on Telegram, Facebook, YouTube channel, and we post a lot more information besides educational videos. Sometimes we come up with our recommendations on multi-bagger stocks. So keep a track of those and stay tuned.